Good morning, crypto world. Welcome to the DYOR Media Network. My name is Tom, otherwise known as Striking, here in this digital media world. Today is Wednesday. That's right, Wednesday, May 10th. A little bit more of 5 of these 12 months through the year already, and which I can't believe. Welcome, everybody, to the morning show. I've been doing morning shows all week, trying to bring you pertinent crypto information, good topics, and interesting things to talk about here on the DYOR Media Network. I'm enjoying doing these morning shows, and hopefully every day we've got a lot of good stuff to bring you. That's not only good for the live show in the morning, but also good for replays on YouTube and all that to bring us that YouTube cash. Yeah, I'm just joking. There's no such thing as YouTube cash. Some people used to make money on it, but not anymore. Anyway, we got a good show for you today. Pertinent topics, as you can see behind me. Banks use blockchain, do they? We're going to find out about that perhaps early on in the year. You heard me on other shows talk about patents. We'll get into that and who's patenting what on the blockchain. Be surprised, but after the show you won't be. Then, of course, like to hear what's going on from everybody here in the morning. See if we can get our great comment machine moving. There we go. Welcome, everybody. Got to subscribe to comment. Got to keep the spammers out of the YouTube comments section. Get those weird feet, people. Stream Deck's telling me I have an update. Of course, they had all night to tell me that. Tells it to me in the middle of the show. At least it isn't the fire alarm. I checked yesterday, if you paid attention, the fire alarm went off in the middle of the show. Turned out it was a test. They normally do have tests on Tuesdays, but usually they post them when they do. Didn't post them. Nope. So I checked it out, and checked for it, said no test. We had a test right in the middle of the show. Nothing you can do about that, ladies and germs. Anyway, let's get into the general idea of what's going on in the crypto world. Well, safe to say Bitcoin is pumping. Let's bring the TV up online here. Every day I like to talk about Bitcoin a little bit. It's here's Bitcoin. I had a small all morning. I had a small short futures position. A bunch of the different crypto people said Bitcoin's going down to 26,000, and I don't. Obviously, it's futures, so I don't put a lot of money on the futures markets. It's just, as they say, the play money. And as I'm getting ready this morning, all of a sudden my phone pings, ping, 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 ping. You've been stopped out, and I was like, how's that possible? It's trading at 27,000. My stop was at like 28,400. No, the high tick right here, you can't see it. It's a 15-minute chart or 5-minute chart. But the high tick on a big buy as 28,405. This is a classic manipulation here to short everybody out. All right, to clear the shorts out, and then I'm guessing some good numbers came out this morning from the inflation numbers that were supposed to be released this morning, thus kicking up Bitcoin. But I believe that to be, frankly, I thought the market would have built it in, so it must have been better than anticipated. I'll try and find some news about that. Unbelievable. Just a small. It was like a $50 position. So if it had hit my targets, it would have made about $50. Nope. Stopped out while getting ready. I think I was doing my hair. Phone vibrates. Like, what's that about? Anyway, this morning, for those of you watching, we are on YouTube, as usual. We're on LinkedIn, and I do monitor the comments on LinkedIn, so if you post a comment over on LinkedIn, I will see it eventually. Although, I must say, my welcome comment, welcome everyone. Posts are failing. Let's just go to my my feed. Took me all week. As many of you know, I was off for a month, as they say, adding the Mrs. Striking to the mix. And I should have shorted at the top of that. That was a breakout for sure. Not going anywhere near that. And when I came back, my streaming skills were not so good. Two cameras here. Won't keep looking at the wrong one. My streaming skills weren't so good. A lot of technical difficulties, errors, and then yesterday my content delivery network crapped out. Big professional service firm didn't work. All right, so let's see if we can get. Our old friend Wes is back with his own channel. He's always had his own channel back from the days when he was into music. But he has recently got into streaming again, which is good to see him back in crypto. Took a break from there for a while. After, as he says, close the book on one era of his crypto and turn the page and move to another one. Kind of what I'm doing here with the DYOR Media Network. As everyone knows, I've been spending a lot of time with Audit Chain, helping them out, doing their streaming. All right, so good luck to Wes. Hopefully we will see him back on the show talking about his favorite things again. Let's see what else I got to chat about here. Yeah, I can't go every day. I got to promise to check in on the Cubs. Everyone knows I'm a crazy Cubs fan. And my camera turned off. Been trying to update the firmware on my camera. No avail. Anyway, my good old Cubs lost again to the Cardinals. Kind of a little grudge match there. The Cardinals have been the the longtime rivals of the Cubs. And because what I hate is a whole bunch of people from Illinois like the Cardinals, because half of St. Louis is in Illinois. I understand people being White Sox fans. That's part of Chicago too, but not Cardinals fans. And my son is going to school in St. Louis right now. The draw of the Cardinals fan is too much. It's too much. Anyway, Cubs lost to the Cardinals last night, 6-4. I would love to play the highlights and go over that. This is the Crypto Show, and we saved the baseball talk for Thirsty Thursdays, Bitcoin, and baseball, which will be coming tomorrow. Anyway, but quickly to check on the standings, Cubs 17-19, under 500. We'll talk more about that tomorrow. What's hot this morning? I like this chart, this crypto bubbles chart. Let's see. This is the week. We don't need the week chart. Let's get the day chart. What's hot? Oh, everything's up today. Look at this. The chart is, everything's pumping. Pumping. It's good. This is the green chart. Not a lot. I think everything just bumped because Bitcoin went up like crazy, which is good. Hex is up. Doge is up. The Trust Wallet coin is up. You name it, it's up. Look at the Zen dashboard. You guys know about Zen? If you're a diehard crypto person. If you're a new person, as I say, this show is geared more towards the new person that wants to learn a little bit about crypto, but also to be entertained for a little bit. And Zen is not something you want to learn on. It is its founder, Jack Levin, has been in crypto a long time, and he's come up with the most complicated way to follow a project with 25,000 different projects. Let's go to the Zen dashboard. Let's go to the beginning of Zen Turbo. This one, I don't even know how to look at it, all the different projects correctly. There's just a bazillion of them. And the Zen dashboard gives you an update on every one of them. They cross-feed each other. Anyway, it's a beautiful ecosystem that I'm only starting to understand. And one of these days I'll have a show from you, and hopefully I'll be able to have Jack Levin on. Speaking of interviews, on Friday we're going to have Sasha from Poodle Token and Poodle Exchange on the show, talking about some new things going on with their project, where they are, how they got there, and what's new. So tune in on Friday to hear about Poodle Token. I thought I had a graphic about that. Let's see if I do. Nope. Anyway, so the Zen is one of these projects where, as most projects do now, they airdrop you worthless tokens, and you just pay the gas to get them. It's a complicated way of talking about it, but the more popular it is, the higher the gas fee. And there's, of course, a ratio between gas and how much you get. And it stays out of the SEC's purview because you're not buying a security. You're basically minting a worthless token. And then later in the project, as people reduce its supply and add liquidity, the value, in theory, will go up. Right now, since the supply is going up, price is going down. I believe I bought $90 worth of it. It's worth $9 now, but that's expected. It's a we'll say it's a 5-year play. Anyway, that's Zen. Another one that's a little nuts here. We were talking about meme tokens this week, and this one for sure is a meme token. It's Ben. Yeah, yep, and it's when it started, everyone thought it was a play from Ben from BitBoy, but it's not. There's another guy named Ben, and I can't remember his name, unfortunately. But he put together a project that's just a meme. It's actually, I wouldn't even say it's a meme. It has real people behind it, not unknown, undoxed people, or it has undoxed people that are known. It has stated goals that they're trying to reach, all things having to do with Ben. And they're going to have a DAO and it's all going to be run by people named Ben. Something like that. I'm not exactly sure what it is. And so it just has to do with everyone named Ben, Benjamin. And BitBoy was not involved with it, but now it is. Let's see if we can find out where it was that BitBoy announced that he was going to be in it. Let's see here. Oh, it went up here. It got a lot of exposure. Here, no, it climbed a lot. Here, let's see. We better go back a little bit. Oh, right here. This was Ben at I can't even possibly tell the price. Low was like 801. BitBoy announces he's going to be in it. Immediately goes to 704, and then spikes all the way up as it gains traction to 601. Basically 100x. Drives you crazy. Just drives you crazy. We do all the struggling. Play the games here, the crypto games. You make a few bucks here, make a few bucks there. Some guy says, I want a project named Ben. He gets a popular guy named Ben to be on the project. 100x. You put $1,000 in that project, you would have $100,000. Although good luck selling $100,000 worth. Let's see, what's the What is the, I don't know how to get that back. Close the little window with the market cap info, and I don't know how to get back. All right, well, we'll not worry about that now. Anyway. Let's get to the part of the matter here, today's show. The crypto news. No, just kidding. Once again, checking in on Bitcoin pumping. Must have been good numbers. Let's check the numbers here. Let's see why Bitcoin is pumping here. Well, here we go. Bitcoin inches higher. After April inflation report, Congress's joint crypto regulation hearing. Oh, that's those two topics. Anyway, the April inflation report must have been good. U.S. Consumer Price Index inflation falls to 5% in April. Bitcoin pumps. Federal Reserve last week announced. Let's see. Let's just get this here. That's funny. I thought I had it on. Bitcoin is inching higher after the annual U.S. inflation rate slowed to 5% in April from 4.9 from 5. That's not much. Versus the economic forecast of staying the same at 5%. According to the Bureau of Labor Statistics, they're talking about who's going to be on this little show here, as they say. Actually, the CoinDex TV is really good. They put on some good panel discussions. They put on some good news events. They do a decent job. So that's why we have Bitcoin pumping. Although I got to say, there are a lot of people calling it to head back down to 26,000 shortly. There's a lot of liquidity down there. I'd bring up the liquidity map, but adding more maps to my system would overload it, cause the streaming to do bad things. But let's do a quick check of the comments. Yes, thank you to everybody on LinkedIn watching. Appreciate it. Good morning. Someone just popped in on the Telegram there and then left us. Put that over here so I can see people come in. Let's see what's going on the mighty Twitch. Usually don't monitor the comments on Twitch, but people do go over to Twitch so they can use the Twitch app and watch in the background. Listen in the background while they multitask on their phone. Welcome everyone. I've been in Twitch. I've been streaming in the Just Chat or the crypto category. And get okay results, not great. And so I decided, all right, I'm going to try the Just Chatting category. The Just Chatting category filled with a whole bunch of weird stuff. But hopefully someone's looking for crypto or just sees it and comes on board. Also, a shout out here to my good man, Jimmy Heck. Jimmy Heck is a radio DJ that I'm friends with. Hecktown.ca. Hecktown.ca is his station. He's live Thursday nights and Friday nights, and then late Friday for the Friday evening party. It's a lot of fun. He's got a radio voice, as they say, that I cannot imitate. He's got lungs like this, so he can hit those deep deep notes and have a nice baritone voice the whole thing. Check it out, hecktown.ca. Anyway, like I said, Bitcoin is still holding up above 28,000, which is going to make everyone happy this morning, except for me, who had a small short on. Yeah, that's right. Let's see what other news. Oh, I love it when the websites that say we have breaking news. Breaking news. Is any of this news breaking on here? Nope. Nope. Nothing at all is worthy of their breaking news section. It's an interesting story, though. You can't see it. It's behind me. It's getting the morning dance from Mrs. Striking over here. Anyway, the story behind me says Michael Saylor believes the launch of a U.S. CBDC is good for Bitcoin. I'm on the fence about these CBDCs, central bank digital coins. Frankly, once one's available and backed by the government, that means that there is a crypto stable coin that is guaranteed A, to be stable, but B, to be 100% creditworthy. Anything that's tokenized on the internet, from real estate to cars to music to whatever it is you can tokenize. Frankly, the whole bond market, it will just switch over to that. I don't think the banks are going to let that happen. As you know, I've been talking about banks and regulation a lot on this show. But we're going to get into that right after these words from our sponsor, Audit Chain.
Let me take a moment to pay the bills here and talk a little bit more about our sponsor, Audit Chain. Most of you know that crypto exchanges have been taking a beating about transparency, and many groups out there are trying to solve that. But Audit Chain has already done that. Audit Chain's protocols and network of validators can mathematically prove that a company's entire financial state, not just proof of reserves, but a proof of state, and whether or not that company is providing accurate reporting and information to the respective government regulators and to the public. Seriously, you and I can check crypto companies and traditional companies' financial reports for transparency and accuracy using a logic and reasoning engine called Pacioli that records its output where? On the blockchain. Seriously, ladies and gentlemen, blockchain technology is now able to be used to check on traditional companies. Behind me is a list of companies that comprise the S&P 500, S&P 100. In essence, the largest U.S. companies by size. More than one quarter, 29 out of 100, have problems with their reports. Remember, accounting and other corporate systems are garbage in and garbage out. So if there are problems with the data out for these companies, in red here, what does that mean? That's right, ladies and gentlemen. There are problems with the data going in. And this was figured out not by accounting or auditing firms and fleets of consultants. This was compiled and reported on by Audit Chain's Pacioli validating nodes and took only 5 minutes. It's revolutionary and it's a disruptor technology. Audit Chain.
Thank you to Audit Chain for sponsoring this show and presenting all of the being the lead presenter for all of the content on the DYOR Media Network. A lot of good things coming up with Audit Chain. I can't stress enough the power of a disruptor technology and that Audit Chain and how they are going about taking care of the shenanigans in the financial reporting business. 100%. Great. But more to the point, a lot of shenanigans exist in the financial reporting business, and one of the worst, or I shouldn't say one of the worst, but the worst people in that reporting group seem to be the banks. The banks, when we run them through the Pacioli validating nodes, the banks have errors. They have addition errors, subtraction errors, sometimes in the billions of dollars. They are missing disclosures all the time. I mean, banks are the large investment banks of the world, and large banks are a complicated beast. Don't get me wrong; it's hard. It's hard to, be a financial manager and get all the information from all the different parts of the banks and get them to report correctly. But like I say, we ran other large companies through there that are not in the banking industry, and they came out with no errors. So it is possible. The banks just don't focus on it. or they do focus on it, but they're focusing on managing the narrative in the report so much. So one of the things with banks now is that the executives in banks, a lot of their pay is tied to the stock price. And that is a problem. You've heard me rail against that for a long time. Not that the concept of tying a bonus to the stock price for an executive isn't bad. If it's tied to long-term goals, it's fine. But if it's tied to short-term and quarterly results, and if 2 quarters in a row it goes up, you get more vested stock options at some low price, shenanigans are going to happen, and they do. An audit chain, well, they capture that. They figure that out. But on the topic of banks, let's talk about that. You've heard me talk about banking industry for a while. And I really hit this topic a lot on my, but on the Audit Chain on the Brink series of podcasts with Jason Myers. Well, my computer is saying that I've lost the internet connection. I don't know why it's doing that. Apparently I'm online. Check do an independent check here. Oh, I'm obviously online. All right. So you've heard me talk about the banking industry and how I got to turn that off. It's just bugging the crap out of me. Anyway, you've heard me talk about the banking industry for a while here, and it started out, I've always kind of talked about it, the regulation, the chokehold that the United States government is putting on the crypto industry, and how coordinated it is. We saw the coordinated attack against Cascadia Bank even before they started. They were just launching. On a single day, leaders in Congress, the president, leaders at regulatory agencies all talked about this scandalous Cascadia Bank, basically defaming them, when all they did was say, hey, we want to apply to the Fed to be a member bank, and we're not going to have fractional banking. We are going to have 100% back to crypto, or 100% back to assets. Doesn't matter what the asset's going to be. If it's dollars, if it's crypto, whatever, we're going to have 100% or more in the bank. And they said, nope. You can't play here. There's another sandbox over there for you guys to play in. So you should go play there. And guess what? People are going there. They're going to the Middle East sandbox. The United Arab Emirates said, hey, the U.S. is screwing it up. Where they can screw up things, we'll take advantage of them. You heard me talk about the UAE a lot on here. I used to live there, so I understand the system there. And their system is, let's see how we can bring more jobs and more income here by reducing confusion and by easing regulation, putting fair regulation in and strong regulation, but simple, one that everybody can follow. The SEC guidelines, or if the SEC were to launch guidelines on crypto tomorrow, it would be a 93,000 page document, and it would take probably 20,000 federal court decisions to kind of figure it all out. The UAE's was about 5 pages. It just said, if you want to have an exchange here, you got to apply. If you want a crypto project, you got to apply. And you got to provide this information. You got to do A, B, C, and D. If you do that, all is good. Not easy to do, but clear rules. So companies are flocking there. And they're being pushed out by the regulation here in the U.S. And who's behind that? Who is behind that? People like this, JP Morgan. So the question is, why are they pushing everybody out? Now, the obvious idea is banks don't want competitors. They want to be able to do everything. Banks have a lot riding it. They have billions of dollars And as we've seen from Silvergate, SVG, and First Republic, banks are very well. Banks are like really, really long bicycles. This is an analogy, and bicycles like like you see the circus performers, and there's 10 people on top of it too. So there's a lot on it. There's a lot of money in banks. There's a lot of different products going on. There's revenue from here. There's revenue from there. This, that kind of stuff. The major banks basically participate in the financing of the U.S. government through the repo system. And the U.S. government says, hey, we need money tomorrow or tonight or in an hour to pay a whole bunch of bills. The U.S. government basically goes to the banks, says, give us some money. So the banks give them money. Then other times the bank says, we need money. U.S. government gives the banks money. Not gives it to them, it loans it to them. It's a very huge interconnected system. And when it breaks, it starts to come apart. So the banks are looking at crypto as like, hey, this could, it's not necessarily, remember the whole business of crypto right now is very small. Banks are multi-billion dollars, $1 trillion valuation on the largest bank, I think, Bank of America or JP Morgan, whatever it is, it's huge. I think it's only a couple $100 billion, but whatever, doesn't matter. It's huge. And crypto is tiny, 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 tiny. Like I say, it's the whole market value of crypto is only the value of the real estate in Manhattan. And think of all the cities around the world. Think of all the real estate around the world. So, I mean, crypto is a tiny part of the real estate world. And the real estate world is a tiny part of the economy. But what major player is involved in the entire economy? The major banks, of course. Which is a good thing. It's good to have these banks that are well-versed in all aspects of the economy, grease the skids to it, make it work well. But it was that we were operating on their terms. And their terms made their life easy. 3 days to settle wire transfer transactions if you're a small customer. 24 hours if you're a large customer. Come on. No service on the weekends. No service on, BS holidays like Columbus Day and Arbor Day. Crypto solved all that. So the bank saw crypto not as losing money now, but as a long-term threat. It could see a rise of another bank. It could see a rise of competitors. It could see a rise of a protocol that they didn't have a good handle in. And just like, like taxis in major cities of the world, they ruled everything. Then Uber came along and just picked at them. All of a sudden, boom, the taxis were done. And the value in owning the taxi medallions went to zero. And so that's what banks are afraid of long term. Not that their value is going to go to zero, but that certain parts of the money is going to come out of their system in a way that causes that giant 200-foot long bicycle that has 10 people on it to become unbalanced. And once it becomes unbalanced, what happens? It just starts wobbling. And when banks wobble, people lose confidence. And when people lose confidence, what happens? Bank run. That's right, ladies and gentlemen. Just like Silicon Valley Bank, the money comes out. And even during bank runs nowadays, it shouldn't be a problem because the banks can technically borrow cash so long as they have assets and get cash infused in the bank pretty quickly. But what it does is it strains their books. It strains their system. So if there's any cracks in their system, the bank falls apart. And that's what happened with SVG. Silicon Valley Bank had too many hold-to-maturity bonds that were valued at cost, not at market value. And when the price of the interest rate went up, the value of those bonds went down tremendously. And so when they had to sell them, to cover the cash needs, they realized the market value of that. And all of a sudden, just nothing happened except a guy pressed the sell button that on something they've been holding for years, and they registered $100 billion losses. People took $100 billion cash out. Bank, that's it. So banks are wary of crypto. But let me tell you who spends money on research. You go through, YouTube, you go through all the different conferences, you see the money that's being poured in by VCs in order to bring in new money into, let's see if we can look for that article. into digital assets, crypto, VC, money. There's a, I can't remember how pitch book. You can go through here and see billions of dollars being invested. Coinbase is dropping money on people. NGC Ventures, AU21, Digital Currency Group, Shima, Pantera, LD Capital, Finance Labs, even in our friend Mr. Netscape, Polychain, GBV. All these people are pumping money into crypto. Still in the U.S., but it like in Switzerland and in the UAE and places, they're really throwing it at it. Kind of cool. A couple of $1 billion here, $2 billion, $5 billion. You want to know who's spending the most money on this stuff? Banks. You can't even believe it. I'm going to tell you what that you probably thought about, but you probably didn't know. If you pay attention to American Banker, it's the magazine / website for the banking industry. Let's see. Usually, here we go. It starts to the news never mentioned crypto before. Now it mentions crypto all the time. And there was an article in here recently about the company that has the most patents. Most patents in the crypto world. Now, obviously, tracking patents means that you understand, you know whose name is on the patent application. You know, companies could have subsidiaries or bought into a research firm that's making the patents, and you wouldn't be able to track it. But Bank of America has the lead there with hundreds and hundreds of patents, and JP Morgan has hundreds and hundreds of patents too. All on crypto. And it's not just that they're making their own stuff and spending billions of dollars doing it. They're creating their own stuff. And my camera turned off again. Like I said, going for a firmware update for that. It's to solve a overheating issue. It's not overheating, the sensor is. And so firmware update to eliminate the reading from the sensor, or divide it by 5, or divide it by 50%, whatever. I haven't been able to get that accomplished yet. Anyway, so the banks are spending the money in-house. And if you think that for any reason that there's a lot of people in crypto, if you listen to the panel discussions, if you listen to trade show talks, if you listen to even TED Talks, the people in crypto tend to get a little insular. They start talking amongst themselves, and they're like, it's us against the banks. The banks don't want us in their system. We're challenging them. We could take their products away. We can change things up, and they're just going to go out of business or something like that. You're crazy if you think that. You're absolutely crazy. And so when people don't step out of the box, if they step out of the box, they would understand. They would understand that the banks are spending a lot of money on it, and they have been for a long time. To the point now where JP Morgan runs their Onyx system. Their Onyx system here is a blockchain based on Ethereum. They forked the Ethereum blockchain and changed it to have two major features. One, to have no gas. It doesn't have any gas because they don't need the gas because it's an internal system. And two, it's permission-based, meaning that to have a wallet on it, you have to be part of to be a client of theirs and have normal KYC and anti-money laundering stuff going on. And you kind of have to be invited. I'm not going to be able to go sit on their blockchain and open a smart contract and do anything like that. It's meant to facilitate intra-client movement of money, intra JP Morgan movement of money. They have a lot. JP Morgan's got a lot going on. But also amongst other banks, and also among bank to government, government to bank. And since they started this, they kicked it off in, I was listening to the guy that runs their blockchain efforts. His name is Tyrone. Since they've kicked it off in late 2020, they've run almost $1 trillion their blockchain, just amongst a couple of their internal clients. See, my green screen is not doing well today. Think about that. Just internal in the JP Morgan system, dealing with its major clients, its major broker dealers, its major liquidity providers. There's almost $1 trillion have gone back and forth on their blockchain. That's just internal, and that's just with a couple of customers. Let's see if we can learn a little bit more about that. So in essence, when you see the SEC saying Ethereum might be a security, oh yeah, it's terrible. It's terrible. I should say the New York regulatory group. But when you see the SEC blasting all these other crypto projects that are just forks of Ethereum, you know who they're not mentioning? They're not mentioning the JP Morgans of the world who built their own Ethereum-based blockchain along with their own exchange and their own tokens. So they have a blockchain, an exchange, and tokens, and they have clients trading these things back and forth. Is there any registration on the SEC for it? Nope. No, there's not. Is the SEC bringing out investigations, sending them a Wells notice? Nope. No, they are not. No, they are not. What does crypto do really well? What does XRP do really well? What does crypto? What does XLM? What do DeFi payment systems do very well? Cross-border payments. Frankly, I don't know why Visa and MasterCard haven't switched to this SHIT yet. But anyway, basically, JP Morgan can now, between its major clients of major banks are things like, really large companies that might have to pay $500 million for something. You don't have to send a SWIFT transfer or have complicated letters of credit guaranteeing the transfer of money. You can just now, within your banking system, from one bank to another, in between clients, send basically a bank token. I don't know. I didn't look into what they call it. I'll just call it the JP coin. Monopoly, gotta be a little Monopoly guy. You can send JP coins instantly. And they're starting to fund their bond market doing that too. And they've also tokenized foreign currency. I think that's one of the big things. Because trading foreign currency and fiat currency is still, it's 8 bazillion times larger than crypto. The money that would have to come into crypto to equal that, I think the whole market cap would have to 1,000x or something crazy like that, because the whole world still operates on fiat, and for to move into Bitcoin would have to be, everyone would have to adopt it for 100% of their payments. Possible, but not likely. Possible, but not likely. So they've developed their own system. And it's growing. It's growing, it's growing, it's growing. And now I spent time researching JP Morgan's Onyx system, listening to podcasts about it. It's a good thing. If you're in the bank, it's a great thing. Tokenizing foreign currency. So in between, like, just if you sit next to a guy on the trading desk, you guys can be like, hey, I need an extra, 20 million yen to trade against the dollar. And he doesn't have it. Instead of going through the company's central liquidity providers and taking time to do that, the guy can go, okay, and just send him the tokens for it. Still within the control of everybody, but it just moves from his authority to his authority to use it. Obviously, since it's an internal system, he can't just take it, then send it to his bank in the Caymans. That's not going to work. But they can move things around very quickly like that. And it's instant settlement. Even at the big banks and all that, the overnight settlement is a process. I was involved in that in the 1980s, in figuring out. It was one of my first jobs before I worked was part of the commodities trading group that I was involved in with E.F. Hutton. In the mornings, normally I had to be at work at like 6:30, but a couple of times it was my turn to take the 4:30 a.m. shift, and I had to show up down in Battery Park in Manhattan and get all the dot matrix printouts of where the overnight settlements didn't work. And there was a lot of them that didn't work because I was back in the day of hand data entry, and people would make errors, and then the computer would go, didn't work. And it was, in the 80s, it was a lot of money. Now think about it now. Like the billions of dollars that go by every day. Our neighbor's smoking again. Can't stand those menthol cigarettes. People that smoke menthol, people that smoke shouldn't. People that smoke menthol cigarettes should just be taken out back. Shot. That's all they're worth. Anyway, I digress. The overnight settlements become instant. They become just like crypto. When you send stellar lumens to somebody to pay a bill, boom, it's instant, done. They've done that now with foreign currency. They're doing it with the bond market, and there's a bank and a couple of banks that are starting to tokenize their bond payments. Even Siemens itself put out a 60 billion euro bond offering. Using which blockchain? But anyway, using crypto to try and tokenize that to allow faster adoption of it, to eliminate the paperwork with having to buy and sell the fractional assets of it, and to, let me rephrase that, to buy and sell it, but then to be able to add the ability to have fractional assets of it. When a bond offering goes, usually you get a broker, a Wall Street broker of some sort, a big firm to help you with the bond offering. And then they place it amongst a couple of places: the California Teachers Pension Fund, the Illinois Teachers Pension Fund, this hedge fund, this fund. They find 10 customers to buy that $60 billion. When you put it out on the blockchain, you can do that, but you can also just do it direct. And those clients can skip the broker dealer. Although the Siemens did use a broker dealer to place big chunks of it. They call them tranches, big tranche of it. But a lot of that is left. You and I could go buy it. Or, someone that bought $1 billion worth of Siemens' bonds can say, I want to offload some of this. I'm just going to put it on the eBay of crypto. Otherwise known as Telegram. But anyway, and you and I could buy a little bit of it. Or you could buy a lot of it. That's opening up these markets and unlocking the potential of these things drastically. And JP Morgan's doing that. And they're doing two things. They're spending billions of dollars doing it. And they're spending hundreds of millions of dollars making sure that other people don't do it. Now, they won't be able to keep other banks from doing it because their competitors also have the same billions of dollars and same lobbyists. But you can see it from the regulation that's coming out, or that will be coming out from Congress, the regulatory grief from the SEC, the New York State regulators, Commodities Futures Trading Commission, the Fed. Everybody is overly influenced by the banks, these large banks, not because they have evil intent, but because it's a job cycle. The people rotate in the jobs over and over and over and over again. And they work for the bank, then they work for the government or a regulatory agency, then they go back and work for a bank. And then each time their pay jumps up a lot because they made a lot of new political connections. They wrote some policy, they have some good ideas or experience. Older people retire, so they hire people from the SEC to come in. And so there's a natural default in this ecosystem of employees moving between regulators and the regulated. It just happens. It happens in every industry, not just banking. Literally in every industry. There's just more money in banking. More money in banking. That's a whole other show, is what to do with these large banks. We should really separate them back into retail banks that deal with depositors and investment banks and not mix the two. But like I say, that's for a different show. But the main takeaway from today's show on this is that the banks are using the power of their lobby, the power of their connections with the government, and the power of their connections with the regulators to ensure that they're able to develop their systems first. And JP Morgan's doing that. They're developing their system. They're putting $1 trillion of value through their own Ethereum-based fork of Ethereum. And it's growing. They're adding more of their clients to it as acceptance of the digital world comes. And pretty soon you won't hear anybody left saying, "Oh, I don't know about this blockchain stuff and all that," because all the major clients of banks will be on it. The way it's going to happen. Now the question is, I don't know. I haven't looked since I'm obviously not part of JP Morgan. I don't know the details of privacy aspects of how they've set their system up. I mean, is there a JP Morgan scan like Etherscan and Polyscan and BSC scan in which eventually you could figure out what everyone's doing? I mean, in the main world of banking, you can see who's buying what in the investment thing. You know who's trading with Goldman Sachs. You know this. Mostly, you don't know everything, but a lot of things you do. Crypto, as we know, you know everything. Everything's out there for the public to analyze, and new websites are coming up all the time, like crypto bubbles. Let's see what's pumping today. What's going on in the past hour. Oh, as we can see, everything's pulling back from the inflation news. Let's see what distracted there. But anyway, I suggest that all of my viewers go and look at. I'll just drop this. Drop this in the chat. How do I get that on the chat? There we go. jpmorgan.com, Onyx. You'll be able to find it if you just search for it. Transforming the way money, information, assets are moved around the world. That's for sure, ladies and gentlemen. Because they're going to sneak up on you, and all of a sudden, you know, all of a sudden what JP Morgan's going to do, I can feel it coming by watching this, is that they're going to use this thing to start being a settlement bank for all the other crypto people. Silvergate went out of business. Signature Bank went out of business. And JP Morgan's going to say, hey, we got this blockchain that we run $1 trillion through, and we're the biggest bank in the world with all of this exposure to every market you could possibly imagine and amazing liquidity. If you're an exchange, Coinbase, you need to send $200 million over to Mexi or whatever. Someone's got to settle that transaction for you. We have this great blockchain. It's instant. 24/7. No shenanigans. No illegal stuff going on. No worry about that. It'll happen. Next thing you know, all the small businesses that are trying to do this, done. Done, ladies and gentlemen. Anyway, let's see if getting towards the end of our show here, and I'll open it up to any questions. Let me prime. Anyway, say that too much anyway. That's my go-to. Like always, I want to thank Audit Chain for sponsoring this. Can't thank them enough. Their product has opened my eyes to kind of what's going on in the banking and regulation world. Financial report. I've always had a background in the accounting industry, not from being an accountant. I'm a zero accounting partner. I've run companies before and understand profit and loss statements. So I get it. I get it. I'm able to look at basic numbers, see what's going on. The complicated things I'm not able to because, I've had a lot of experience looking at things from an operations point of view. And when you look at companies' overall financial statements, it includes their corporate financing tricks, as they say, earnings before taxes, interest, depreciation, and corporate jet fuel, country club spending money, all sorts of other things. And as I say, it's the Jack Welch scourge. Back in the day, Jack Welch was the man. Grew General Electric into be a giant corporate behemoth, but it turns out he was a charlatan. What he did is he introduced a whole generation of people to the idea that it's okay to use corporate finance tricks to pump up the value of your company rather than just focusing on operations and manufacturing. And that ruined a lot of companies. And you can see it now in companies. You can see it now. You can see when companies lose focus and generally when they hire a CFO that has that Jack Welch mentality, all of a sudden their only focus is on earnings per share. And the method to do that, instead of improving their operations so it becomes more profitable and thus driving their earnings per share. When they start using corporate tricks to do it, as we say, the Irish double Dutch, moving their IP to Native American tribes or offshore and claiming their IP as the revenue generators, and the people that do all the work in the factories or the coding and all that are just, irrelevant. Those are called corporate tricks. And that's a function of corporate finance departments using tax law and accounting rules to trick everybody, which works fine. It pumps up the value. They extract the value of the company out, of assets of the company that would otherwise be underutilized. We get that. But like I was talking about the analogy with the banks earlier, as soon as a little crack happens, once the operation guys call and say, hey, we had a problem. Our major machine that makes 1 million cars a year broke. And there's no replacement for it for 6 months, so our earnings are going to be down. We're going to only make half the amount of widgets or cars or whatever. And then all that corporate finance stuff collapses, and it's a disaster. And that's what happened to General Electric. The new guys took over, and they saw the house of cards that Jack Welch had built. Came tumbling down. Kurt. There's the mighty Kurt. Well, maybe they just tuned in when you haven't even saying anything, just saying. Kurt, I have no idea what that means. No idea what that means. I'll be on for a few more minutes if you want to elaborate on that. That's fine. Well, maybe they just tuned in. You haven't been saying anything, just saying. Oh, maybe he's talking about the people tuned in when I was quiet. It's only been a few times I'm quiet here, and it's when I'm fixing my camera or checking out the comments on it. But I've been on for the past hour, and our time has come for the day to switch over to the crypto lifer. Let's see. Let's bring him up here. I've got him on the little TV here. And I've got to get the ability to redirect my stream towards him. Where is the lifer? There he is. Just hit that share button so it helps him out. Help a content creator out by liking and sharing it. And we'll drop him there. Everybody, go see Crypto Lifer in this link over here, or wherever it is that you see it on here. It's in the chat. For those of you watching on the replay, it's just his live show of the day. No need to go to it, but I do suggest everyone goes and watches Crypto Lifer. He has a lot of good things to say about stuff. And the ad is about liquor stores here. the LCBO delivery. Well, that's kind of good that the LCBO, and it's frozen. Why is it frozen? And there's another ad. Unbelievable. All right, there's Kurt. Sorry about that. When somebody came in and asked what the conversation was about, you stated just listen, but nothing was being said then. I get it. I'm sorry, I didn't understand you correctly. Voice to text. I see he's having it translated using YouTube's closed captioning. Well, thanks for listening. I appreciate it. I'm not going to be here much longer today. Because switching over, I like to watch Crypto Lifer, and so I do a show that leads up into his show. And I'm going to go do that. So, ladies and gentlemen, thank you for paying attention today. What we talked about today is we talked about how banks are using their money and their influence to do two things. One, to keep the new crypto markets down in the U.S. by using the U.S. government as a regulatory authority, and to discredit crypto and to set the narrative that it's really bad. But they're also doing, they're using their money to build their own products out. And they're doing it in a way that is very successful. And as they say, transforming the way money and information and assets move across the world. Internally, as a summary, internally within JP Morgan, they've set up their own Ethereum-based blockchain. I should say a fork of Ethereum. It's not Ethereum, but it's a fork of the EVM chain. And they've moved around $1 trillion now in tokenized assets around everything from tokenized foreign currency to tokenized bonds and to tokenized just regular cash, moving things around either intrabank, interbank, between clients of theirs. Their clients can be the major liquidity providers to the stock market. Clients can be the major broker dealers of the world, the major, like Ameritrade and all these big houses that need to move money around. And they've switched it from having a settlement process to the instant settlement of blockchain. Kurt says, love your show. Just blows me away how low the viewership is right now in the crypto world. Can't wait for it to blow up again. Yes, Kurt. I can't agree with you more on that. Like I said, I watch a lot of other channels that just talk smack. Yo, bro! And they get 1,000 viewers. Or they talk about meme coins and they get 2,000 viewers. And then we talk about the important topics of the day. And across the different channels that I'm broadcasting on today, I'll probably get about 20 people tune in at any one time. For those of you tuning in or listening, having firmware problems with the camera, trying to fix it. Hopefully I'll get that fixed today. Anyway, that's it for me today. Hopefully on the replays, as I say, the replays are always on Vimeo, on Roku, Amazon Fire TV, YouTube, and a couple other places. I occasionally have a few things left over on Twitch, and I've tried local and Rumble, and those communities just suck. Those are all whack jobs over there. But if you have Roku, search the DYOR Media Network. I'm always about a week behind in posting on that. If you have Amazon Fire, also search for the DYOR Media app. And I've got all of the content from DYOR Media Network, from my Audit Chain on the Brink podcasts, and I believe Carmen Crypto's Crypto Chit Chat on there as well. Those are good things. Of course, you should watch on YouTube because I get monetary credit for that. Another 2 cents will be earned. But anyway, I digress. On that. Anyway, hope everyone's had a good day here. Just checking the comments really quickly here to see if there's another one here. Nope. Have a good one, ladies and gentlemen.
Let me take a moment to pay the bills here and talk a little bit more about our sponsor, Audit Chain. Most of you know that crypto exchanges have been taking a beating about transparency.
This is the right one.